So good morning everyone and welcome to today's webinar. We've completed a sound check there 5 minutes ago with a few people who had already logged in, so there's no sound issues so far, so we're going to get started. Okay, we have designed today's webinar to give you an understanding of how PAYE modernisation will affect your business and what impact it'll have on the running of your payroll. PAYE modernisation will involve the most significant reform of the PAYE system since its introduction in 1960. Employers will need to calculate and report their employees' pay and deductions as they are being paid. This will make it easier for revenue, employers and employees to ensure the right tax is deducted and paid at the right time. Today we have 3 speakers presenting today's webinar. First up, we have our main speaker, who is Paul Byrne. Paul is the Managing Director at Thesaurus and BrightPay. After qualifying as a Chartered Accountant, Paul went on to set up and manage his own accounting practice. Paul co-founded Thesaurus Software in 1991 with the goal of providing payroll software to Irish businesses. Thesaurus Software now provides quality software products and excellent customer service to over 100,000 businesses across Ireland and the UK. Next up, I'm delighted to welcome Sandra Clark, who is a partner at BCC Accountants and a council member of the Irish Tax Institute. Sandra is on the front line when it comes to helping her clients through the new PAYE modernisation changes. Sandra will join us for our panel discussion. So welcome, Sandra. We're also delighted to welcome our next guest speaker, which is DavidHanlon, who is the team lead on the change management team for the PAYE modernisation project. David is also very much on the front line when it comes to PAYE modernisation and will also deliver a presentation today from revenue's perspective. So welcome, David. For our Q&A session today, we will have Paul, Sandra and David. We will also be joined by Audrey Mooney, who is our support manager here at Thesaurus Software. So welcome, Audrey. So first up, we have Paul, who will discuss PAYE modernisation, understanding and implementing the new legislation. Next, we will pass you over to David for the revenue presentation. Finally, at the end, we will have a Q&A session. So throughout the webinar, please type in any questions you may have into the questions tab on the control panel. And we'll try to get through as many questions as possible. So there's a good few questions that are already through there today. So just bear in mind, there are a lot of attendees logged on today, so we may not get to all questions. Finally, today's session is being recorded. We will email everyone with a link to the recording and a copy of the presentation slides later today. There will also be a survey that will appear when you leave today's webinar, and so we would be very grateful if you could fill it out to give us some feedback. So I'll now pass you over to Paul.
Okay, thanks for that, Karen. As Karen said, PAYE modernisation or real-time reporting, it's probably the biggest overhaul of the PAYE system since PAYE itself was introduced back in 1960. So that makes it a year older than me. So what is PAYE modernisation? Well, currently lots of employees are being given the wrong tax credits and cut-off points, and this is because revenue only gets payroll data once a year in the form of the P35. Receiving the data in real time will ensure that revenue can allocate the correct credits, thereby avoiding any over or underpayments of tax at the end of the year. Revenue will know where the taxpayer is working and how much they are earning. Also, many employers are not operating PAYE correctly in that they don't register new employees or they use out-of-date tax credits. So this is also being addressed by PAYE modernisation. Essentially, a file, and let's call it a mini P35, will be submitted electronically to revenue on or before each pay run. In most cases, this means that the file is submitted either weekly or monthly. Also, as part of this, the retrieval of tax credits will be automated, which should ensure that the correct credits are being applied by employers. In PAYE modernisation, these new files, they're called the Revenue Payroll Notification, or ORPN for short. And this is the one that is used to get the tax credits and cut-off points for new and existing employees. and this replaces the existing P2C file. Then there is the payroll submission request, known as the PSR, which will be used to submit payroll data to revenue each pay period. This we might also refer to as the mini P35. The full file specifications are included in the links on screen, and we also have included them in the handout section on your control panel if you wish to download them. Okay, this particular webinar is CPD accredited, and one of the things we need to do just to get that accreditation is now and again ask a couple of questions. So just to make sure that you're paying attention, what does ORPN stand for? Is it Revenue Payroll Notification, Revenue Payroll Number, or Real-Time Payment Notice? So at the moment there should be a poll on your screen, and you can just tick which option you think is the correct answer. Okay, so the results are in, and I can say that 95% chose the correct answer, which of course is Revenue Payroll Notification. So what direct effect will this have on employers? So as we said before, instead of a yearly P35, there will be a mini P35 submitted with each payroll run. Also, checking for updated tax credits and cutoff points will also be an integral part of each payroll run. Details of employees starting and employees leaving will be included in the mini P35, so there'll be no need for the P45 forms. Just to cover the subject of APIs, which stands for Application Programming Interface, this will give time-saving benefits in the payroll software, and it enables different software applications to communicate with each other. So in our case, it allows our payroll software to directly communicate or interact with revenue systems. So instead of the very manual routines of downloading or uploading, selecting file locations, logging in screens, etc., there will be just one submit button to replace all of this. One example I give is looking at how tax credits or P2Cs are retrieved at present. Basically, you log into your Russ account, you go to the Revenue Record tab, you then select P2C details, you then search for the relevant tax year, then you export, which involves choosing where to save to. Then in your payroll software, you go to the relevant P2C import section, and you need to select the correct file from the correct location and then import. So by my count, there were at least 3 or 9 steps involved in this process, which is made much smoother with the API. So with the API, it'll just be one click to achieve all of those steps. Similarly, with the periodic payroll submission or the mini P35, the actual transfer of this data to revenue will also be a one-click process. Because of the APIs for P2C retrievals, or sorry, ORPN retrievals, I should say, and file submissions, the actual work required each pay period should be less than it is at present. So the main message here is that if you're a normal by-the-book employer who pays your staff using payroll software, the new system in 2019 should bring you time savings and a much more fluid experience each pay period. It is probably revenue who face the biggest challenge of all in making sure their systems work the way they should from the start. With any big bang approach, there are risks that things may not go smoothly. I know myself from working alongside revenue on this project that they're doing everything they can to ensure the new system will work out of the box. So we all hope that Murphy's Law keeps at bay on the 1st of January 2019. So let's look at a typical pay period and the sequence of events and where APIs come into play. First, you enter the details of new employees into the payroll, if there are any new employees. Then you retrieve the latest tax credit information, and this is a one-click process through the API. Next, you enter the pay, hours, and deductions for all the various employees. Then you process and finalize the payroll. Next, you submit the file to revenue, the mini P35 as we call it, and this is a one-click process. Then you distribute the pay slips either by email or printing or by an online portal and pay the employees. We are hoping that the responses to the API requests will be answered in seconds by revenue systems, and this is something we feel is important to the user experience. In the UK, where we have a similar system, the response is usually answered within 10 seconds. It should be noted that the APIs will use the employer's or agent's digital certificate, or the Ross cert, and this cert will need to have been installed on the computer. If the user can log into Ross on the computer, then it has the cert installed. So you may want to review your setup in advance of the 1st of January. You will need to ensure that you have a cert installed on the computer, on the computer that you use to process payroll. If the cert is on another machine, there are instructions within the Ross screens on how to back up the cert and copy to a different computer. If the payroll is split, say between directors and other staff, and these are done on different machines at present, this will be a problem under the new system, as the employer cert will have more or less full visibility of the overall payroll. So this is where you will need to look at maybe having more than one employer registered number, and therefore more than one cert, so that you can keep the payroll truly separate. An employer, by the way, can have as many registered numbers as they want. So one of the main benefits of the new system is that there will be no more P forms. At the end of the tax year, the individual taxpayer will be able to view and print their official certificate of earnings and deductions directly from their own employee portal within revenue. And this means that P60s should no longer be required. The files being submitted, each pay run, will have details of employees commencing and employees leaving. So this will mean that P45s and P46s are no longer required to be completed by the employer. As revenue will be receiving file submissions each pay period, the annual P35 will no longer be required. In addition, this periodic file will eliminate the need for P30s. You will still need to submit a P35 this coming January or February, and still need to give your employees their P60s, but this will be the last time you'll need to do this. Okay, so we're just going to do a quick demonstration of the payroll software that we developed for 2019. And I suppose one of the things I would have to say at this stage is that this software is in testing, and it's also using a test revenue system, so anything can go wrong, but hopefully it won't. So first of all, there we have the normal open company screen as you'll be familiar with. So we'll open this particular employer, and I'll put in the password, and they're open. Okay, just one thing I want to show you here under the file menu, and this will be a one-time thing, is where you add your digital certificate. Basically you select it from, it'll default to wherever your Ross certs are normally held, and you basically select it there and enter a password. Oh, sorry, I didn't actually select anything there, but it is already installed in this particular case. But just to show you that is something that you'll do through the software, and it should be quite a painless experience once the cert, as I said before, is actually installed on your machine. So the first thing I want to show you here is the retrieval of ORPNs, which is this button here, and it's at the moment it's saying to do, and it'll always say that until such time as you actually retrieve the ORPNs and update your employees' tax credits. So we click that button, and this is actually contacting revenue systems now at the moment. So what that particular lookup has done is it's actually said, okay, give me the credits and cutoffs for employees that you know that are employed by us. And then once it's finished that, it says, okay, there might be employees that you don't know we have. Maybe there's new employees that have joined, and it'll do a lookup for those employees as well. So once those employees don't have credits or cutoffs allocated to other employments, they should receive back the full credits and cutoffs in this particular case. So as you can see here, this is very similar to what you've seen before after you've retrieved P2C file, the list of employees, their credits and cutoffs. A couple of new things on this screen. One is the employment ID, which in this case is the default of 1 for all these particular employees. That's something I'm not going to go into too much detail today because it's a fairly big subject, but it's something you shouldn't need to worry about. It's something the payroll software itself will look after. But basically, if say an employee leaves and comes back within the same year, they will be given the ID of 2, say in that case, so that when we retrieve the credits and cutoffs, we'll know which instance of the employee within the software to actually apply the credits and cutoffs to. The other thing we have here on this screen is the ORPN number, and this is this is something that revenue apply to the ORPN details. So if, say, for a particular employee, the next ORPN lookup gives new information for them, it will have incrementally increase their ORPN number. So the software basically automatically knows, okay, there's a new ORPN for this particular employee, so therefore we need to update their details. And that ORPN number also is returned in each periodic submission that goes into revenue. So revenue will know that we're actually applying the latest ORPN details in that particular case. So I just hit update in this case, and in this particular case, there's no new credits or cutoffs found for any existing employees because I already did it there a while ago. So just close out that screen, and we'll see the to-do marker is gone from that icon. So next, if you're familiar with the software, the thing to note here is that, look, we're keeping everything as similar as possible as we can to the way you're used to it. There's just an awful lot of changes onto the HUD, so to speak. So going in and processing, say, a change for an employee is identical to what it was before. So just hit update there, close. And again, this stuff you're all used to already. With the payroll preview, before we actually do the update, we can see that guy has changed there. We can print that out or email it if we want. Close that screen. Next thing we'll do is we'll update the payroll for that week. So it's saying here that the last pay date was the 9th of January, the next one is 16th of January. We click on update, and we've completed the update. Okay, so there we will now see under the PSR icon that there is one return outstanding. So we click on that, click on prepare PSR, and that gives us the details, basically a summary of the taxes that are included in that PSR. We can view the details by just clicking on view, and that will basically go down through all the information that's been submitted to revenue. So then we can say once we're happy, we can say submit PSR to revenue. And again, this is contacting revenue, sending the PSR, checking that revenue is checking the response from revenue, and that's actually the response we're receiving. So in that particular case, we can see that revenue now have that information and they've received it and we're fine. At this stage, we've changed where we reckon you should be doing the backup. The backup we feel should be done straight after you've completed that or submitted that PSR. This is because if you need to restore the backup, we want to make sure that the payroll knows that you have actually submitted a PSR for that particular payroll run. Previously, we used to do the backup straight after you did an update, but I say in this particular, for next year, it should be straight after we do the PSR submission. So I'll just close out of there for the time being. And then after that, really all you're doing is you're printing or emailing the pay slips and paying the employees. One of the other things to look at here as well is the corrections facility. And I'm sure at this stage, I just want to say as well that one of the things we had to make sure that the new system or our software handles next year is the ability to roll back individual employees back into previous periods without having to reverse the full payroll for all employees. And this is necessary because of the new system. So anyway, there's a couple of new features or types of corrections we have to handle here. One, I think, which is going to be the majority of times that the correction is going to be used, and this is where you've just updated the payroll and where the employees have not been paid yet, but it turns out maybe you forgot to import the details from your timesheet system, whatever. So it's basically the oops factor, and we cater for that. The next one is if there's a new employee that started maybe a couple of pay periods ago. And I know this would sound very unusual, but it happens quite a lot in bureau situations. You haven't been told about a new employee. Yes, you can go back to that period, enter the new employee, and it'll prepare all the various PSRs for that employee. Another case is where the payment itself might have been different that was made to an employee in a previous pay run. Again, you can do that individual correction. Another one that we have here is the wrong PRSI class, and this probably happens with, say, proprietary directors who maybe have been put on A1, they should have been S1 or vice versa. And again, this can be done as a one single item, maybe at the end of the year or 6 months into the year. So we've had to think about all the different types of corrections that we'll need to sort of, you know, integrate with the new system on PAYE Modernisation. The other thing as well that the new system is able to do, and this is where it really has a benefit over the UK system, is we can actually check the returns that have been submitted with revenue. We can get a breakdown of the actual liabilities that revenue hold. For example, if I go into the report section here and go to tax details and go to the monthly details, so you're probably used to that particular screen as a P30 screen that you've used to seeing before. There's a line here where we have total payable, and then we have what's payable per Ross. So we can go in and we can click this button, and it basically goes off and looks up the details of all those months for the submissions that have been made. So again, if there's any stage where revenue are showing a different amount payable or liable to what the software is showing, we're able to fairly well drill down and see where that difference is. Okay, and I'm glad everything went fairly smoothly there. So that's the end of the actual demonstration part of the webinar. So I'll just close out of that, and Rachel's going to retrieve the PowerPoint screens again. That's great. Okay, so just again on the subject of corrections, submission deadlines and corrections. The UK system, which is what we're used to dealing with heretofore, the periodic submission, or the FPS as they call it, must be submitted on or before the actual payday, and in Ireland it will be the same. In my view, it'll probably be much easier to just submit after finalising each payroll, in much the same way as we showed you in the demo. At least you will know that the payroll is done and dusted when you close out of it. If a submission is incorrect, again, as we showed you in the demonstration, a correction submission can be made by the software. If the correction means that more tax is payable for a previous tax month, revenue may apply interest. Also, a correction after the month's close-off or sign-off date, say after the 23rd of the following month, will be seen as a change to a statutory declaration. If there is a constant pattern of corrections for particular clients, or if there is a pattern of late submissions for particular employers, revenue may take corrective action, such as site visits or other interventions. Just to say as well that corrections are dealt with on the basis of follow the money. So if an employee is, say, over or underpaid in a period, and their pay is then adjusted in the next period to correct this, no correction submission is required in that case, because the payroll is reflecting what was actually paid. If an employee is paid an amount different to what it says in the payroll, then a correction submission will subsequently be required. And as I showed you in the software screens, that's catered for by the software. So, are you ready for on or before processing? So this will be a challenge for some businesses, for example, the hospitality or construction sectors, where historically payments have been made on a net to gross basis. So I'm just going to ask Sandra here, who's our resident tax expert, and she's involved in practice herself, as to how do you feel this is going to impact a lot of employers out there?
Yes, I think employers are just going to have to make themselves ready for January and any changes that might involve. As Paul has already indicated, certain sectors have traditionally acted on a net to gross basis. We would certainly always advise our clients that you should be agreeing gross wage terms with your employees, no matter what sector they're in, because nobody knows what the cost of grossing up is, and that can change from week to week, and that would become even more prevalent with the introduction of PAYE Modernisation. Also, some other considerations that should be looked at is the possibility that if you're currently paying the week in hand and you're estimating the hours, that maybe to move to a week in arrears. Now, obviously that involves a bit of cash flow pain for possibly the employees, so it would be something that would need to be discussed in advance of doing so, or potentially even changing how often the pay period is, maybe from weekly to bi-weekly or from bi-weekly to monthly. All of these things will mean that there will be less time involved, obviously, then in the preparation of the payroll. But I think certainly for some sectors, doing payment for a week in arrears would certainly be better than a week in hand, because at least then there's more certainty over the hours that are being paid.
I suppose one of the considerations, Sandra, is say the payroll operator is, say, going on holidays? Yes.
So as the legislation provides for its payment on or before, so if you're filing the returns and the ORPN with revenue and the payroll summary record, you can estimate the payroll for the next 2 to 3 weeks based on best estimates. And then obviously if there's any changes to those, for example, if an employee is out sick and they haven't been paid for a particular week or a particular day, you can adjust their payroll then in the next pay period when you return from holidays.
Okay, thank you for that. I'm sure there'll be a few questions about that now in the Q&A section.
No doubt.
Okay, the other subject I just want to cover here briefly is the question of processing manually or using payroll software. I think some of the attendees today are probably using manual systems. In fact, Revenue estimates that of the total 208,000 Irish employers, up to 50,000 employers still calculate their payroll manually. So these employers will still be able to calculate payroll manually. However, in each pay period, be it weekly or monthly, they will need to log into Ross and enter all the required details for all their employees, a bit like manually completing a P35 each pay period. And I should say this as well, this manual facility in Ross will only be available for employers with 5 or less employees. Also, before processing the payroll in any week, they will need to religiously log into Ross to get details of tax credits and cut-off points. And this again would be a very manual process and prone to error. So for these employers, for their sanity alone, never mind the huge time savings, it should become apparent that they should either be using the services of a payroll bureau or that they should be using payroll software. And obviously our hope is that payroll software will be the winner in that case. To quantify it somewhat, I reckon that doing it manually, say for a 5 to 10 employee employer, could take 2 or 3 hours a week. The payroll software costs less than €3 per week, so it just gives us some perspective. So, a brief summary of why you need to get things right. 1, the employees logging into their My Account will expect to see their most recent payments and for these details to be correct. The next issue is late periodic submissions will potentially give rise to interest and or penalties, plus the employer will come within revenue's risk analysis profile. Next, a constant pattern of correction submissions will potentially give rise to interest and or penalties, plus the employer, again, will come within revenue's radar. Next, because the reference number of the latest ORPN, I should say the ORPN number itself, is included in the payroll submission request, revenue will automatically know when ORPN checking and processing is not happening. Something I alluded to briefly previously is split payrolls. Some employers operate 2 payrolls for the one company. For example, directors may be dealt with on a separate payroll. This is a problem in that the digital cert will have access to all the PAYE information in Ross for that particular registration number. So if you want to continue to keep these payrolls separate, the ideal thing to do is to actually register a new number and therefore get a new cert for that particular employer. And again, as I said before, an employer can have as many employer registered numbers as it wishes. We will, at some stage, we will do up guidance on how to actually look for additional employer registrations and digital certs, and we post that to the website whenever we have it. Another reason that you might actually look for a different registered number is if you operate, say, different branches and they all operate different or separate payrolls. The employment ID field, which I kind of briefly showed you during the software demo, it's going to be somewhat problematic to make sure that we have the correct employment IDs between if the same employees are operating or employed by different branches. So it's something I'll cover maybe in later webinars in a bit more detail, but it might be worthwhile, particularly if your branches are geographically separate, to consider actually registering different reg numbers for those particular branches. One other thing to note from the 1st of January 2019 is the emergency rules are changing and they're becoming a little bit more severe. So 2019 sees the removal of the first tier of emergency tax credits. So what that means is the first 4 weeks will be taxed at the standard rate up to the emergency cutoff point and high rate above the cutoff point. And there'll be no tax credits allowable against this. And thereafter, after week 4, all pay will be taxed at the high rate. Also, as you probably know already, and this doesn't change, if there's no PPS number, all pay will be taxed at the high rate from the very start. And just in case you're not familiar, the emergency USC is 8% on all earnings, even in the first 4 weeks. So the emergency rules apply where an employer makes payments or emoluments to or on behalf of an employee in respect of whom an ORPN has not been received. So where an employee furnishes the employer with a PPSN, the employer needs to take all reasonable measures to establish that the number furnished is in fact the PPSN of that employee. And I don't know whether you know or not, but within the Ross menus, there is a new button it's called a PPS number checker, and this is what enables you to ensure that the actual PPSN number that you've been given is actually valid and correct for the particular employee. So what these new rules should mean is that there'll be much greater incentive for employees who have no record with revenue to become registered. And the example here is mainly students who are, say, for their first summer job or whatever, or non-nationals. And in their cases, the Jobs and Pension Services is the first port of call for these employees who don't have a record of revenue. And the other thing as well that would help here somewhat is the list of employees, which is most employers will now have a message within their Ross screens to submit a list of employees. Doing so will ensure that the employees that they have on record will be included in the first ORPNs that are retrieved by our software in 2019. So just it's another reason actually to submit that particular list. Okay, we just have another very quick poll before I finish my part of today's webinar. And the question is, do you feel prepared for the introduction of PAYE Modernisation? So do you feel extremely prepared? Do you feel very prepared? Do you feel somewhat prepared or not at all prepared? Okay, that's an interesting result there. We have extremely prepared 2 and not at all 6. I think most people just didn't want to answer that one. Okay. We did a survey ourselves. You probably know we asked that particular question last week. So just 2% of employers felt they were extremely prepared in that particular survey. And this figure is probably in line with what we see today. From the customer survey, a massive 32% said they felt not at all prepared. And this figure has improved slightly. But the percentage is still quite high. Hopefully it's a sign that our PAYE Modernisation webinars are helping people with their preparations. Another stat from last week's survey was the employer awareness levels. So when asked if they were aware of PAYE Modernisation, 7% of employers said they were not aware of PAYE Modernisation. So with just a few months left until the introduction of modernisation, this is worrying. It is important that all employers understand the new changes being implemented. So make sure to spread the word if you know of anyone who would benefit from our webinars. We have more webinars coming up in November, and these are available to everyone, not just our customers. Okay, so I'm just going to hand you back over to Karen here for a minute.
Okay, so we're just going to get set up for David's presentation, and while I just have you there for a few minutes, I'm going to show you a quick look at Thesaurus Connect. We do also offer PAYE Connect, which offers the same online functionality and features. So this is an add-on product for our payroll software products. So Thesaurus Connect works alongside the payroll software. Payroll information itself is stored in the cloud and can be accessed online, but the payroll itself must still be processed on your existing desktop application. The online functionality allows online access anywhere, anytime for accountants, employers, and their employees. So secure online backup. Thesaurus Connect securely synchronizes and backs up data to the cloud, protecting against ransomware and cyber attacks. A chronological history of backups will be maintained, which can be restored at any time. Employers can log on to their online dashboard at any time to see up-to-date information where they can see notifications, employer details, amounts due to revenue, and any upcoming calendar events. Employers can also invite their accountant to access this payroll information. The online employer portal allows access to all employee payslips, payroll reports, a full overview of employee leave, amounts due to revenue, and employers can also upload employee documents such as employee contracts or staff handbooks. So this is a look at the employee self-service portal. Employees can access their personal self-service portal online, which is password protected. Just have a look at a payslip here. So here we can view and download current and historic payslips, P60s and P45s. Payslips are automatically added to the employee self-service portal each pay period, which eliminates the need to print or email payslips. An email is also automatically sent to the employees, notifying them that their payslip is available. Or if they're using their smartphone app, they will get a notification on their smartphone. They can also view HR documents that have been uploaded for them, such as the contract of employment and company handbooks. Employees can view all past and upcoming leave in the Thesaurus Connect employee calendar, including sick leave, holiday leave, and absentee leave. Here, an employee can request leave through the employee self-service portal. Also, employees can view and update their personal information, such as their postal address. So that's a very, very quick look at Thesaurus Connect, and it looks like David is ready to go for revenues presentation. So I'll now pass you back over to David.
That's great. Thanks very much. My name is DavidHanlon and I work on the PAYE Modernisation team in the Revenue Commissioners, and I'm delighted to be here today to be able to talk to you with Thesaurus. So the background and the design principles for the PAYE Modernisation project are that revenue needs to build the PAYE system so that it actually reflects the current employment environment that there is out there. So we know that the employment environment has changed since the system came in the 1960s, and we need our PAYE system to be able to be agile enough that we can actually deal with people who have multiple employments, with the same employer, and people who are going to be changing their employment throughout their career. We also know that payroll has moved on from, let's say, being a pen and paper exercise in the 1960s to now that the majority of employers are using some sort of payroll software, and some are using very sophisticated payroll software. And this gives revenue and employers an opportunity to be able to take advantage of advances in information technology. So revenue will be able to pass information to employers that they can use in their payroll software to calculate their pay and deductions, and employers can send that information directly through to revenue and cut down on the amount of contact that's required between revenue and the employer through Russ. So again, freeing up time both for revenue and for the employer so that we can all meet our obligations. Then we have expectations, and we know in revenue that expectations are that we can actually see information in real time. And our experience is that we have employees who are contacting us on a regular basis and expect that we can actually see what's on their payslip effectively, and expect revenue to be able to advise them and give them help in relation to that. And the reality is that we don't have that information because we only receive that information at the end of the year via P35. So what is actually happening is we are asking employees to give us information from their payslip, and we're trying to figure out what is the position and try to be able to advise and help employees in that way. So under PAYE Modernisation, we will actually have the pay and deductions details will be sent through to us in real time. So it should help us to be able to help employees in real time and cut down on the amount of queries that we have so that we can actually help employees. Obviously, we would see that there's a lot of advantages to this, and we've identified advantages both for employers, employees, and from revenue. And for the employer, we see that this is something that can be seamlessly integrated into their payroll. So again, talking about this business to business and the ability to be able to use the advanced technology that there is out there, we can see that this is something that can be seamlessly integrated into payroll. And this should help to minimize the employer cost to actually comply with their PAYE obligations. And one way that this is going to happen is that all of the employer P forms are going to be abolished. So the P30s, the P45s, the P46 and the P60 and the end of year return, P35, they will all be abolished because the payroll submissions that are coming through to revenue will actually handle all those requirements that were coming through on those forms. Importantly, the right tax is going to be paid now, but we are not changing the current due dates. So if your current payment due date is the 14th or the 23rd, that will continue to be the case. But importantly, the right tax, the amount of tax that you deducted from your staff, is what is going to have to be paid over to revenue. And overall, we would see that there will be time savings for employers because, again, this is something that can be seamlessly integrated into your payroll, and it's revenue taking advantage of advances in payroll software that there is out there and information technology advances. For employees, there will be a simplified online services available. And this should help employees to maximize the use of their entitlements. So again, an employee who has multiple jobs or who's moving between jobs can contact revenue to make sure that their tax credits and their standard rate cutoff point is maximized and they're not overpaying or underpaying tax. From 2020, they will get an automatic end of year review. So again, they'll get that information from revenue. And during the year, they will have access to real-time accurate data. So again, they'll be able to go onto PAYE services and see in real time the information that revenue has on them that has been reported to them to revenue by their employers. And overall then, employees are going to have far greater transparency in what the employer is reporting and deducting from them and reporting to revenue. So again, it gives greater transparency to revenue. Obviously, there's something in it for revenue, and again, for revenue, we're introducing a statutory in-year employer return, which is going to replace the P35. So instead of the P35, we are now going to have monthly returns. This is going to make compliance easier for revenue because instead of waiting till the end of the year, we're going to be able to act much quicker. And if we see that an issue has arisen, we'll be able to contact that employer and have an intervention if needs be. Again, revenue are going to have accurate and up-to-date income details, and this is going to help with budgeting and forecasting for the Department of Finance, and is also going to help with our compliance projects and our intervention projects, again because we'll be able to intervene and see what's happening in companies at a much earlier stage. We see that over time there should be reduced customer contacts because the information will be coming directly through the payroll software to revenue. But obviously, when this starts in 1119, we expect there to be a lot more contact from employers. And revenue are putting in place the structures to make sure that we are going to be able to handle the level of calls that are coming in. And revenue are well aware that we are going to be dealing with in January, February and March of 2019, people getting used to the new system and people complying with their 2018 obligations, so filing their P35s and issuing P60s. So revenue are well aware, and we're putting in place the structures to be able to deal with the customer contacts. And as I've said earlier, We are going to be able to have timely targeted interventions, so we won't have to wait till the end of the year in order to see what's happening in a company. If there's an issue that arises, we'll be able to have a much more targeted intervention, so as we can assist those employers who maybe are having difficulties or who aren't meeting their PAYE obligations and get them back on track. Just to put the employment environment into a bit of context, there are 2.8 million active employments, and these include pensioners currently. There's roughly 256,000 employees have more than one live employment. So again, that shows that nearly 10% of all employees have more than one live employment, and some employees have multiple employments with the same employer. There are over 200,000 employers, and of these, there's 111,000 employers with 5 or less employees. So again, Revenue are aware that this might be a challenge for those smaller employees, and we're putting in place the systems to allow those employers to be able to meet their obligations. The good news is that 98% of all employers file through Russ. So again, there is a good deal of engagement there through Russ, so that is a positive. Just to be aware, your current obligations as an employer, and this is where we kind of put on our teacher hat, just so that we can let people know what it is exactly they should be doing at the moment, is that what you should be doing is you should be applying the latest P2C when you run your payroll. You should be calculating the tax to be deducted, so the income tax, USC, PRSI and LPT, and you should be providing your employee with a payslip that shows the pay and deductions. You should follow through on the P45 and the P46 for every employee starting or leaving the employment with yourselves. And each month or quarter, you must submit a P30 and make the relevant payment. And then by February of the following year, you must complete a P35 with the associated listings on the P35L for all employees. So in order to give effect to PAYE modernisation, we had to change the legislation, and the legislation was enacted on the 25th of December 2017. And the points to note really in the legislation are that the revenue payroll notification is now going to replace the P2C. So the revenue payroll notification is provided for in the legislation. The legislation also provides that the payroll submissions must be made on or before each payroll is run by the employer. So that is something that must come through to Revenue on or before an employer runs their payroll. For Revenue's part, we will issue a monthly statement which will be based on the submissions that the employer has made, and this will be deemed a return by the 14th of the following month. So that's an important point. The return date is going to be the 14th of the following month. We're not interfering with the pay dates, but the return date is the 14th. There is also provision there for persistent technology failure. So we always use the example of last year's Storm Ophelia, when systems might have been down and the electricity might have been out, and that's something that an employer wouldn't have been able to meet their PAYE obligations. So Revenue recognised that and has made provision for it in the legislation. But again, the onus would be on the employer to prove that they couldn't meet their PAYE obligations because the internet was down or because electricity was out. Direct debit is continued to be provided for, but we're also introducing variable direct debit, and this is so to help employers that they don't have to keep on going in and out of Ross in order to make sure that they have paid the statement and they file the return properly, that they be able to go on and they be able to treat the amount that's on the statement as if it was a utility bill and sign up for variable direct debit and make sure that the payment has come in. That way they can be sure that there's no overpayment or underpayment on the system for them. So again, the normal rules would apply there. Somebody would apply to Revenue to be able to go onto a variable direct debit, and if they meet the criteria, then they'd be able to do that. So the high-level design and process flows in relation to PAYE modernisation, we've rather crudely taken the whole process and we've broken it down into 4 steps really, and I'm sure that the guys in the room here won't appreciate this, but in order to try and make it a bit simple for people and so that we can get the message across, this is how PAYE modernisation is actually going to fit in to your current obligations. So as you currently do at the moment, you identify the employees to be paid. You will come to Revenue to get the latest revenue payroll notification. So you'll poll Revenue to get the latest revenue payroll notification. That's the current P2C. You will use that to perform your payroll calculations. And then when you finalize your payroll, as per usual, that will generate a file that will go to the bank so that your staff can get paid. It'll generate the pay slips, but now a report will also be produced that will be sent through to revenue. For employees, they should see very little difference. They'll still continue to get their money into their hand or into the bank because PAYE Modernisation does not interfere with that. They will still be entitled to get a payslip, so they should still receive a payslip from their employer. But now they will be able to go on to PAYE services and see the pay and deductions that their employer has reported for them. So again, there's greater transparency there for the employee, but we're not actually interfering with the employee getting paid. So as I mentioned earlier, all of the employer P forms are going to be abolished. And in its place, this is what's going to happen. The employer is going to send through their submissions every time they pay their employees. And based on those submissions that we receive from employers, a statement will be issued to the employer each month with the total tax due based on those submissions. So we're taking the submissions that the employer has sent through to us, we're aggregating them, and we're sending back out a statement to the employer. If the employer does nothing, the statement will be deemed a return by the 14th, but the employer will have an opportunity to review the statement to make sure that it actually reflects what they thought that they were going to be paying. If there's a need for corrections, they will have an opportunity to make corrections, and based on that they will send through a payroll submission that again correcting wherever the error might be, and revenue will issue with a new statement. New employees set up on the payroll will be set up using the payroll submission, and the revenue payroll notification will be requested. That will commence the employment. So when a new employee starts with you, you put in the commencement date onto the payroll submission, and then when you run your payroll, that information will come through to revenue, and that will commence the employment. Again, when you're ceasing an employment, you put in a cessation date onto the payroll submission, and that ceases the employment. So that takes away from the need for the P45 and P46 process. It replaces that. The end of year returns, so the P35, that will be gone, because in its place each month stands its own statutory return. What this means though is that some employers who do use the end of year process in order to tidy up their payroll, that opportunity will be largely gone. So there will be no option really to tidy up at the end of the year. So again, we would encourage employers to look at their business processes now to make sure that they're actually going to be able to meet their obligations, and that the amount that needs to go through the payroll is actually going to go through the payroll. And for 2019, there will no longer be an obligation on employers to provide a P60 to employees. And the P60s that are the form that's going to be going out this year does actually provide that information on the P60 for employees so that they will be aware of it. So for 2018, you will be issuing a P60 in 2019, but for the year 2019, there will be no obligation to issue a P60. Now, what some employers have said to us is that they are aware that their employees will look for a P60 or some form of a P60. And if an employer does want to issue some form of an income statement to their employees, that's perfectly fine. They can go ahead and do that. But from a revenue perspective and from a legislative perspective, there will be no need for an employer to issue a P60. So just moving on to the different payroll reporting options that employers will have. And I know that Thesaurus here are offering the direct payroll reporting, but there might be some of you out there who are listening in who aren't going to be using the direct payroll software, or might be using other software. So we'll just go through the different types of way that employers will be able to meet their obligations. Starting with the direct payroll reporting, on starting the payroll for a given payroll run, this payroll software will request a revenue payroll notification for all employees that have been amended since the last payroll run. The request for ORPNs for any new employees who have not been paid before. So the payroll software will also request ORPNs for any new employees. And revenue will allocate credits based on the most up-to-date information available for that employee. When you run your payroll, the payroll software will use the details returned in the ORPN to calculate the statutory deductions for each employee. If new employees are only added at this stage, the software will request an ORPN for that employee, and all of this will be happening instantaneously. When an employer comes then to completing and finalising their payroll, the payroll software will send revenue the details of each employee with their pay and statutory deductions. The start and end date for an employee are sent as part of the payroll submission. And revenue sends an instantaneous acknowledgement that the submission has been received. So you'll have confidence that you'll know that the submission has actually been received from revenue, by revenue. Revenue will then send payroll software a response containing any errors and the total liability for that payroll submission. So again, on you receiving your submission, you will receive a response from revenue, and if we recognize that there's any errors in the information that's been sent through, you will get information in relation to that, and we will specify the total liability for that particular payroll submission. The next option that employers will have is through Russ payroll reporting. So this is where an employer will opt to either download the ORPNs and upload their payroll submission through Russ. So for those employers, they will be logging on to Russ as they normally would. When they go onto Russ, they will see a screen, and then an employer can actually choose this as being one of their frequently used services, so that this screen will appear when they log in. And that screen will give them the options either to request an ORPN, submit payroll, or to view the statement of account. So just to go through the process for the Russ process for requesting an ORPN, an employer will be able to have two options. They will be able to request an ORPN by file upload. So that's where their own payroll software will have identified the employees that they want to get the ORPNs for, and that will create that file, and they'll be able to upload that onto revenue systems, and they'll get a response back. Or they can complete an online form where they're going in and physically putting in the details of the employees, and that's more for employers who don't have payroll software. Then when it comes to submitting their payroll by online form, so this would be again for those smaller employers who aren't using payroll software or have chosen not to use payroll software, and they want to use the online form, and we've built a system so that they can go in and input the information directly onto revenue systems. So again, they'll be going in onto the same home screen, and they'll be clicking on submit payroll. Their employees will be pre-populated there after the first payroll run, so we will have that information there, and they'll be able to select the employees that are actually going to pay for this particular period, so the information that they want to input for the particular employees. So they will select the information there. They'll input the information, so again they'll select the pay frequency, weekly or monthly or fortnightly, whatever it might be. They'll also need to put in their employment ID, and then they'll move on to the next screen. Once they've done this, they'll get back this screen, and the next couple of screens actually are a little bit bigger. So just showing you the screen because this is the screen that you'll be coming into when you first land. So it'll give you the details of the revenue payroll notification. There'll also be the option to actually view the ORPN there. Then the basic employee details that revenue holds in relation to them. They'll have the employer will then have the option to input the details for pay and deductions. And then if there was any other pay and deductions, they'll also be able to do that. When an employer clicks on that particular update screen there, you can see pay and deductions. There's a button there, update screen. You can click on the update screen, and you will be putting in the pay and deduction information there. Now, it's important to note that you will actually have done this offline, so to speak. You will have done this your own payroll calculations separately. Revenue system will not be calculating and will not be verifying the information that you're inputting. So it's very important that the information that you put in is accurate and that you're sure that the information that you're putting in is correct. So you're putting in the pay and deductions, you're putting in the pay date, the gross pay, the gross pay for income tax, putting in the details that you've run from your payroll, and that'll go onto the screen. And you'll have the options there to pick the correct PRSI class and pay the PRSI. And then once you're satisfied that everything that you've put on is correct, you will need to confirm that the details that you're going to be submitting are correct. So again, the onus is on the employer to make sure that the information, the submission that they're about to make, that those details are correct. So then once you've clicked onto the next screen, you will get this summary, and it'll give you the pay date, the gross paid income tax, and the deductions for that particular employee. And then you can either submit that payroll, or if you need to add another employee at that stage, a second or a third employee, you can click on the button, add additional submission items. So you've submitted your payroll and you're satisfied that that's correct. You will get an acknowledgement back letting you know that your payroll run reference is a particular number there that you have, and that you will have that satisfaction that you've actually submitted your payroll. You can then view that payroll run if needs be. So for an employer who wants to view the payroll run, view the information that they've actually submitted through to revenue, you will have these options. You can go on to view payroll, and there will be a number of options to actually search by. So you'll be able to search by date, or you'll be able to search by a particular run reference. On the home screen there, you will see the recent payroll runs will automatically appear. So the information that will appear there for the particular employer under the payroll reference, payroll run July, you can see that the payroll run details, it's being processed, the particular dates are there, details, a summary of the deductions that have been made, and then a submission summary. So that there were 9 active items on this particular payroll submission, and those active items there really relate to the number of employees that you have submitted information for. Again, if you need to view payroll and you need to do it by a particular way, you can put in the tax year, you can put in a particular payroll reference, and again, you'll have the options there to view that as well. You'll be able to drill down further then and see what information is available from revenue on the payroll submission, and this is the detail that you're going to get back. And again, the whole idea of this is that we're providing the employer with the information that they need so that they can be satisfied that the payroll submission is correct. So in this instance, you can see we have recent submissions there, and if you look at the top line, it's under recent submissions. You can see the date is 28/8/2018, and there's one invalid item. So that means that that particular payroll submission, that line item, won't be included by revenue in the statement that goes out. Then when you go to active items, you can see that there's a warning there, so that an out-of-date ORPN has been used in this case, and then that there's also a correction. So an employer has made a correction, and the previous line item is ID2. So again, the employer has the information there on the payroll run to be able to view the details that they've submitted and the information that revenue has supplied back to them. Again, when we look at the invalid items here, you can see that the invalid item is there at the top so that the employer can see it straight away. And we also give a message as to what the error is. So in this case, a duplicate line item ID is in the payroll submission. So again, that's why we've deemed this to be invalid. So it's really important that if you get it back invalid warning from revenue, or you get back an invalid message, that the employer actually makes that correction to that particular line item, because it will not be included on the statements that revenue issues and could result in an underpayment of tax because the statement won't be accurate. You can also see then there under additions, again, we're giving the information in relation to warning that the employer is using an out-of-date ORPN has been used. So in this particular instance, that line item will be included in the statement, but we're letting the employer know that they're using an out-of-date ORPN, and really the employer should be going and getting the most up-to-date ORPN that revenue have in relation to that employee and using that to run their payroll. So again, when we come to the payroll run and you get the recent submissions, you can see there that there's on that summary page that it highlights then that there's invalid items, and in this instance there was 7 invalid items, and you can drill down further so that you can view what has actually made those items be invalid, what the errors are. And again, the information comes through to the employer. And again, just to emphasize, very important that if you do receive a notification that there's invalid items, that it's very important that the employer corrects them immediately and resubmits that information through to revenue, because it won't be included on the statement that goes out from revenue. So the employer has received their ORPNs, they've used those to do their payroll calculations, and they've submitted their payroll to revenue. Now they've received a statement from revenue, and in this instance the employers will have to go back into Russ in order to be able to view the statement. So when they go into Russ and they view the statement, the recent statements will be there, and it gives employers the different options and the different information that they need. So if you look at the first return there for January 2019, that has been, the liability was €100 and the balance outstanding is €100. The employer didn't do anything, so it was deemed to be a return. So they didn't go in and accept the statement that they received, so it was deemed to be a return. And in this instance, because there's a balance outstanding, the employer will have an option to go in and view the return or to make a payment. So they're the options that that particular employer will have. For February, there was no submission. There was no, there might have been a submission, there might have been a nil submission, or they made no submission at all. But in this instance, they've gone in. Again, you have that information that you accepted that that particular submission is correct, so you'll be able to go in and view that return. For March, there was a liability of 570 was reported, and again the employer accepted the statement that that was correct, and that became the return. So again, in that instance, because the money is outstanding, you can go in and view the return or make the payment. And for the current month then, April, the employer has made their submissions. The liability is 414, and the status of that is due, so the employer can go in and view and accept. The employer will be able to get the summary details there so that they know what it is that they've submitted and details of the tax and deductions that have been made. And they will have the option there on the declaration to agree with the summary above and submit that. So again, that's just the from a Ross perspective, how PAYE modernisation is going to work. So you can see that an employer will have to upload and download, their payroll submissions and download the ORPNs in order to run their payroll. And for those employers who aren't using payroll software, there will be facility to be able to go in and input the information directly onto Revenue system. But it'll be very important that they make sure of the accuracy of what it is that they're inputting. From feedback that we've received from employers, we did get a lot of queries about how can an employer actually confirm that the details that they have for their employee are correct, so that the PPSN that they're using is correct. And Revenue have put in place a system to allow employers to be able to verify that the PPSNs are correct. So this has a facility that went live in April of this year. It allows employers to check a maximum of 10 PPSNs at any time. And there are CAPTCHA is used to protect from phishing, and internal reports will be produced by Revenue on usage by employers of this facility. The result is either that the PPSN can be used for that employee, or that you need to contact the employee to confirm the PPSN. So I'll just show you what the system looks like, what the information that you will actually be inputting, and anything with an asterisk indicates that it's a mandatory field. So you will be required to put in a first name, you will be required to put in a surname and a PPSN number. If you have more detail, you can also input that. When Revenue checks the system, what it is checking is the information that you've put in against what's on Revenue records. So in this instance, you may have an employee who's using an English version of their name, but Revenue have an Irish version of their name. In that instance, you may get an error back, and you may get a message back that we can't confirm that the PPSN is correct because our details aren't matching. So just to show the results that you will receive, so you can see there, employee 1, we're confirming that the details are valid that we have on our systems with what the employer has inputted. But for employee 2, we're letting you know that the invalid details have been inputted. And again, the message that you'll get is, based on the information held by Revenue, the PPS number and the details you have entered are valid. For the invalid details, the statement that you'll receive is, Revenue is unable to validate the details you have supplied against our records. Please verify that the details with your employee by checking against, for example, Revenue correspondence, quoting his or her PPSN number, or with the public services card. So again, we'll be informing you. We're not saying that the employee hasn't provided a correct PPSN. It's just that the records and the details that you have given us, that we haven't been able to match them. Just on that, some employers have, when we've been out with them, have been under the impression that they need to use the PPSN checker for all of their staff, their current staff, and not just new staff. And what we would advise is that there is no requirements. If you're satisfied that the PPSN number that you have for your current staff are correct, then you don't need to go in and use the PPSN checker. It's just there as a facility for employers, so that they can be sure of the information is correct that's coming through. We have had reports that somebody has been trying to check 1,000 employees of their current employees that they've had on the books for years and years. That's not what the PPSN checker is in place for. It really is for new employees, for employers that want to check that the new employee that's starting with them, that they do have the correct PPSN. So from our own stakeholder engagement, we are aware of the business processes that some employers have out there, and what we would recommend is that net payment arrangements should not be agreed, because they can leave the employer exposed to additional liability due to the reallocation of credits by the employee. So under no circumstances should an employer really enter into net pay arrangements, because they really are leaving themselves exposed if the employee goes in and reallocates their tax credits, or if they opt to pay for their property tax by deductions. Again, that can lead to issues. If the incorrect tax credits and rates are already allocated, you as the employer could be liable for any shortfall with the possibility of the amount being regrossed. So again, it's important to remember that. So always deduct tax based on the revenue payroll notification, and always ensure that the correct deductions are applied. The ORPN is available in real time, and the credit and rates available for that employee at payment time. So the ORPN will come back to you instantaneously. So always poll for the latest ORPN and use that when you're making your payroll deduction calculations. It is clear from the consultation that we've had that some employers do focus on the end of year process for reporting to make sure that they have, I'll start again. It is clear from the consultation to date that for some employers to focus on the end of year reporting may have contributed to in-year payroll processing practices that are not fully in line with PAYE obligations. So some employers, take the example of BIK, they don't make sure that the correct BIK is going through the payroll all during the year, and when they come to the end of the year, that's when they might do a review and they realise that the employee should have been charged more or should have been charged less for the notional pay that should have been going through. So employers really need to look at their business processes, because now every month is going to be its own statutory return, and the payments that are made to an employee needs to be reported every time they make the payments to the employee. So the real-time reporting regime that's being introduced will make these practices by employers much more visible, and so that your processes will need to be changed and will need to be reviewed, and the opportunity is there now to actually go and review your business processes. We do know that payroll is complicated, and we know that there will be a need for corrections. So while it is recognised that errors in payroll will occur, every effort should be made to ensure that submissions to revenue are accurate and timely. If the information contained in the statement issued by revenue is incorrect, there is a legal obligation on the employer to fix the relevant payroll submissions to ensure that the return reflects the correct liability for that month. So the onus really is on the employer to make sure of the accuracy of the information, and if they receive a message back from revenue that a line item is invalid, they need to correct that line item. This may require fixing incorrect submissions or submitting any outstanding payroll submissions. And again, all data received, including corrections and the timing of submissions, will feed into Revenue's risk analysis systems. So to be aware that if you're constantly making changes and amendments or corrections to your payroll submissions, well, this is something that Revenue will be aware of, and it may indicate that there's an issue with the particular employer and could lead to some form of intervention. And we would emphasise that employees must be easily able to reconcile their payslips with the data submitted to Revenue on their behalf. So again, this will cut down on the amount of contact between the employer and the employee and with Revenue, because once an employee can reconcile what's on a payslip, what's going to be on Revenue systems, well then the employee will have that greater transparency and will be sure of the information that the employer is reporting on their behalf. As alluded earlier on, Revenue are requesting a list of employees from all employers, and this is being done in 3 tranches. We've had tranche 1 and tranche 2 already have gone out, and tranche 3 is going to go out there in September, and that's going to focus really on the retail sector and those sectors that have more fluid employments, more casual employments, to try and get that information into Revenue. As we said earlier on, employer and agents will be notified via a banner Russ, and there's also an e-brief on this, was issued on the 28th of June, and the employer help desks will handle all issues and queries in relation to the list of employees. So if there's any employers out there who haven't submitted their employee list yet, we would beseech you to please send it in. You have up until October to send it into Revenue. Just to give a flavour of the stakeholder engagement that we've had to date between August and October, we've attended quite a number of events, and we do a good number of the Thesaurus webinars as well. We're trying to get the message out there as far and wide as possible, and we take every opportunity to attend as many events as we possibly can. And coming up in a couple of weeks' time, we have the Ploughing Championships, which I'm really looking forward to. We go out to the IFA, we try and deal with as many of the payroll software providers as possible. We're meeting with the teachers as well, and as many of the accountancy practices as well, where we attend engagements with them as well, in order to get the message out as far and wide as we possibly can. As part of our own external change management, letters were issued to all employers advising them of the PAYE modernisation changes. So that's why I'd be a bit concerned about your poll earlier on, that 7% aren't aware of PAYE modernisation. All employers received correspondence in April and early May advising them of PAYE modernisation. Revenue continues to go to outreach events focusing on employers and agents to get that message out there. As part of our own national compliance imperatives, there's a real focus on PREM. Again, it's to enforce the message and to get the message out there in relation to PAYE modernisation. And all interventions with employers are used as an opportunity to make them aware of PAYE modernisation. We're carrying out a review of the 2017 P35L data, and employers and employees are receiving new P2Cs and TCCs where they are not registered. So again, this is to get us ready for 2019, that everybody will be in the system and will have will get a correct ORPN. Employer customer service visits by district staff commenced in May and will continue to the end of 2018. So each district has a team that's dedicated to actually going on customer service visits. And if you do receive a call from one of these teams, we would recommend that you actually welcome them in, because they will have great information for you and hopefully will be able to answer a lot of your questions that you will have about PAYE modernisation. There will be a media and advertising campaign will be starting in September, and that's going to run on to December. Initially, we're going to concentrate on employers because that's who it's going to impact the most, but there will be a focus as well on employees. And we are running revenue regional seminars, and the facility is available there on revenue. They're going to run through September and October. So if you want to actually sign up for any of those, you can go on to revenue.ie, and over the next week or so, you'll be able to pick a location that's and a venue that best suits you. So preparing for PAYE modernisation. Again, what do you need to do to get ready? So make sure that you have the right PPSN for all of your employees. Have you registered your employees with revenue? So make sure that you've registered your employees with revenue. Have you an up-to-date tax credit certificate for all of your employees? Have you completed the P45 process for any employees who have stopped working for you? Have you adequate controls in place to ensure that benefits and notional pay are being accurately calculated during the year? So again, don't leave that to be an end of year process. And are you aware of your duties as an employer at the end of the year? So again, a lot of queries that we receive from employers are actually to do with their current PAYE obligations, that they're not actually doing those correctly at the moment. And if they can get those right now, then the transition to PAYE modernisation should be a lot more straightforward for those employers. So as I referred earlier, there are going to be revenue regional seminars. They're kicking off towards the end of September, and they're going to run on into October. They're free to attend. There will be demonstration screens and videos for people to be able to see, and employers should request to attend on revenue.ie. For more information, we have a lot more information in relation to PAYE modernisation, and just there on the seminars, you can, on the home screen, you can go on revenue.ie, it'll bring you through to the employer seminars, and you can register there. And for more information in relation to Russ, there's the details in relation to the Russ Help Centre. So again, for getting digital certs and being able to sign up, the information will be there. And if you have any issues, that'll be for the Russ Help Centre. And then if you have any queries in relation to PAYE modernisation, on Revenue's homepage, we have a lot more information there under the tab PAYE modernisation. And employers can also, if you have got any questions or queries, using the email address payemodernisation@revenue.ie, if you send through your queries through to us there, we have a lot of teams that we can direct your specific query to, and we will get a response back out to you. So thanks very much for your time. Appreciate it.
Thanks, David. Okay. So while we have your undivided attention, I'm just going to have my 1-minute sales pitch. So in today's webinar, we used Thesaurus Payroll Manager to give you an insight into how PAYE modernisation will work. Both Thesaurus Payroll Manager and our other payroll package, BrightPay Ireland, will be able to seamlessly handle PAYE modernisation. We do have the experience and the expertise, having already rolled out a similar system in the UK. The employer version of BrightPay, which handles an unlimited number of employees, is only $149 plus VAT. There will be no additional charges for implementing PAYE modernisation. BrightPay also has many useful features to help with your administration of your payroll processing. You can roll back individual employees, you can create custom reports, payroll journal exports are available to Xero, Sage and QuickBooks. Plus we have the optional online backup BrightPay Connect, which I showed you earlier on, which I suppose was Thesaurus Connect, but both products are an add-on cloud facility. These enable access to payslips and annual leave requests and an employer portal to view all employees' leave, payslips and payroll reports. BrightPay can also import from previous payroll data from Sage, CallSoft and the Big Red Book. So you can really hit the ground running knowing that you're using the right payroll software for PAYE modernisation. So just with the new GDPR legislation, we can't email you unless you subscribe to our mailing list. So make sure you sign up to hear about upcoming free events and PAYE modernisation updates. You can unsubscribe at any time. Our newsletters also include special offers and discounts throughout the year. So here we have our next free webinars that we have coming up. So they're available online and you can register free of charge. I'm just going to leave this slide open while we have our panel discussion and Q&A session. So I think there was almost 800 people attended today's webinar. So we have a lot of questions to get through. Some of the questions are very, very similar. So if you just listen out, I suppose, to all of the questions, because we mightn't read out all of the similar questions. There's an awful lot of questions about going on leave and preparing your PAYE modernisation files. Also, just to note that we do work with a number of organisations to help them with their PAYE modernisation needs. So if you're a member of an organisation or if you're working with an organisation, do contact us. We're working with them or partnering with them, offering online training on our payroll products, and we also offer free customer support on any of our payroll products. So do talk to me if you're interested in offering any kind of, I suppose, support to your members. So if you just bear with us for 1 minute, we're just going to play musical chairs here and get set up for our panel discussion. Thank you.
Good to go?
Okay.
Okay, thank you. So firstly, before we get started, just to say there is a huge amount of questions. If you do have to go, they will be on the recording that's sent to you. So if you're afraid, you miss your answer, it will be on the recording for you. And as Karen says, a lot of, I suppose, repeat questions. So I'll try and avoid the repeats. So just listen out just for a similar question, I guess. So quite a common question, I suppose, is people going on holidays, what's the procedure for uploading returns?
Yeah, so as we were saying earlier on, if you're going on holidays and you're the person responsible for preparing the payroll, you can prepare the payroll submissions in advance. Best estimate of what you expect will be paid out while you're away on leave, and then if any corrections need to be made, they can make the adjustment in the following pay period.
Okay, so direct debit for a set amount paid to revenue each month. How will this impact on the new system?
Yeah, we're not interfering with people's direct debit that they've signed up for and that they've agreed with revenue. So anybody who's on a direct debit will continue to have that facility and be able to pay via direct debit. What we would emphasise is that obviously don't try to give, there's a balloon payment at the end of the year, that there might be interest, it might apply there. But we would encourage people to sign up for the variable direct debit so as that they can actually make sure that they won't have any overpayments or underpayments in the year. So maybe have a look at that as an option of dealing with that.
Is that a bit of a recommended method for revenue? And
yeah, even from my own point of view as an employer, sometimes I have to admit I've forgotten in the past to actually log in and make sure I have paid by the RDR, wasn't the debit instruction or whatever. At least under the variable direct debit, I don't have to think about logging in. Like I know David showed as well a lot of screens there to do with Ross and whatever. We would imagine that most of our customers don't come near any of those screens, that everything's dealt with through the payroll. So they have the variable direct debit as well. There will never really be an occasion for in relation to PAYE where they need to log into Ross.
Somebody's just asking, will net to gross calculation facility still be available?
Oh yeah.
So yes, but I suppose just to reiterate, it's not something that any of us would recommend. Somebody wants to know, will there be a live demo of the entire process available?
Well, believe it or not, that was the entire process. I mean, you might think we're trying to oversimplify it, but it actually is quite simple. The major issues are trying to, as David was mentioning, probably the business processes that you have in place. If they're any way sort of out of the norm in terms of net to gross, or where payroll's been actually done on a year-end type basis, that's where the difficulty arises. But for the majority of employers, it is actually as simple as we showed it on screen there.
So somebody's just asking, well, you need to log into Ross and file a payment for each period. So I guess, as we said, if you don't log into Ross and accept the statement, you'll deem it to be accepted anyway and expect payment then.
Expect payment, exactly. Yeah.
So anyway, it's fine. The list of employees, so it says revenue requesting the list of employees. We tried to import it in CSV and EPS format, but Ross could not read it. So I'm not sure if this is a user of our software, but we certainly have the file. It's included in the software. So if you're using Thesaurus, it's under the Ross menu, list of employees.
If you do have any problems uploading it, our support desk is always available to
absolutely, yeah. So would it be possible for a company to have 2 accounts for Ross? Currently, I have to get the financial controller to submit the returns on Ross. So
yeah, I mean, it would be advisable in that case to actually register a separate PAYE register number and to get a digital cert for that particular number, so that they are kept separate. I think, is that the question, Audrey? Correct?
Yeah, I'd say they want to, I'd say somebody just wants to have overall access. So yeah, a second number is what you're saying. Sorry, I was reading questions.
Overall access, well, overall access.
Yes, the financial controller submits. I think the financial controller maybe wants to have access to some, or to all of it, sorry, but the other person not have access.
Yes, it's just that other person just have the one digital cert that relates to those employees.
Exactly, yeah. So employees are being paid fixed salary every week by bank transfer, but the payroll is being run once a month, and weekly pay slips are being sent to the employees. Will it be possible to keep it like that? So I guess if you do the payroll in advance and send the submissions in advance, there's no issue in keeping the system like that, but you couldn't be doing it at the end of the month.
Exactly, because it's payment on or
before
the payment date. So if the payroll is processed at the start of the month for the month ahead, then that would be okay.
Somebody's asking, is there still a need for payroll software?
I think there's more need than
ever.
Absolutely.
My biggest concern is that currently we don't receive a P2C for staff after early December, and revenue are not available over the Christmas period, whereas we operate 365 days a year and may have staff starting on the 24th of December, for example. Will they recover from revenue over Christmas?
Yeah, I know from us, Christmas is cancelled. We're having 2 Easters next year instead of having Christmas this year. So no, we're aware, don't try that for the month of December we need to have the structure in place to be able to support employers there. So no, revenue will be open over Christmas. Maybe not Christmas Day, but we will be.
Or St. Stephen's Day, probably.
And maybe not St. Stephen's Day, but we will.
Probably the same as us, not public holidays.
Yeah. But there will be. I know myself. Our leave is cancelled, so I will be there.
Okay. I suppose quite a common question as well I saw coming through was when do revenue plan to communicate with employees? I know you said the employers are, I suppose,
employers are the focus for the time being, because we see that there's the greatest impact on employers now, and they're the ones that need to make the changes to get ready. For employees, we would see that is something that we will do towards the end of the year and focus on into next year as well, to get the message out there to them. So there will be communication with employees, because it's very important that they sign up for jobs and pensions, that they use PAYE services, but the focus will be on the employers initially. But we will be communicating, and will be an advertisement campaign for employees as well.
I think it would be fair to point out as well that I think with the new system as well, the employees won't actually have access to their kind of online pay slips, for want of a better word, until probably April onwards.
May,
to let the system bed down and make sure the information that the revenue is receiving is accurate.
Someone's asking, is there a fact sheet for employees? But I suppose you don't know what necessarily you're going to have for employees until...
No, again, probably what will be covered, we're actually putting information up onto revenue.ie for employees. That's hopefully going to go up in the next few weeks. It'll cover the likes of starting and finishing a job, emergency tax, the types of things that actually impact an employee, and there will be information up there on revenue.ie for those employees.
So somebody's just saying they're no longer used to Thesaurus, but they love BrightPay. Will the process be the same? So
Yes.
absolutely as similar as it can be. Yeah.
BrightPay has the advantage over us in that BrightPay has done it before in the UK, so a lot of their screens are well mature at this stage, whereas it's all been new for me from the start of this year to try and develop it.
If an employee is registered to more than one employer, I presume we will get their pro rata tax credits.
Yes.
Yes.
The ORPN request will provide that information.
So somebody's just asking, when will we be showing the new interface for BrightPay, I suppose?
Within the next couple of weeks. Yeah.
So maybe on the November.
Yes,
or before,
definitely. Yeah.
Okay. Okay, so for the revenue advisor, if an employer inputs an employee's details onto the payroll software and the employee has not registered their first employment via My Account, how does the ORPN account for this?
Well, if they're never registered for PAYE, if that's the question, well, an ORPN won't be able to issue for them because they need to register for PAYE. So you'll need to contact the employee and let them know that they need to register for PAYE. That will create the employment, that will create the detail there so that we can create an ORPN for the particular employee.
It'll come back
Yeah,
maybe there to say no ORPN and it'll be emergency.
The software will interpret no ORPNs and apply emergency base in that case.
If you pay revenue monthly direct debit, will this be amended to the actual amount due? So I suppose that's only if you sign up for variable. And I'm sure it's a seamless process for people to change from direct debit to variable.
Well, again, they need to go through the process to verify it and try again. I mean, it's criteria from revenue, but yet, so they need to engage with revenue to make sure that they can sign up for that.
Okay, so if we process a monthly payroll before the end of the month, do we still have until the end of the month to submit the PSR? So I suppose the key thing is on or before the employees are paid, you submit your PSR. Well, has the employer to pay the liability to Russ? So again, just to emphasise, payment dates or arrangements are not changed and they will remain as they currently are. How do you prepay employees for 2 weeks holidays in advance and have the correct tax? I mean, that's the system. You just tell the system that you're paying the employees in advance and then it'll apply the tax credits, etc.
It is as
for
it
those
is
holiday
moment,
weeks, as it's there at the minute. But if you need any support with that, just contact the help desk. Can you still operate weekly and monthly under one reg number? Absolutely.
Absolutely.
If you processed a full payroll run and sent submissions to revenue, is it possible to restore and redo the payroll run and send the correct info to revenue? So I think that was your top correction there, really.
Yeah, you can. You can basically reverse the total payroll run, that even if you've submitted it to revenue. Is what the software does in that particular case is it says, okay, you didn't mean to submit that, so we immediately delete that submission from revenue system as well, and then it'd be available then for processing or for accepting the new return. In relation to previous corrections, it doesn't do delete, it does what we call a line item or replacement ID, which is replace line item, which basically is just telling the revenue system that the previous line item was incorrect, and here's the new one that's replacing it. But the answer to that is yes.
Am I correct in thinking we no longer have to load anything manually onto the revenue site? So yeah, that's absolutely correct. Come 1st of January. So somebody is asking a good question. Why would there be a difference between the system and what revenue have if it's automatically processed via the software?
I guess that would happen if people do restore backups that their system, they had a problem with their own computer, crashed or whatever, and they were transferring onto another computer.
Or even the last PSR just wasn't sent, it's still outstanding, for example.
That will show on the tab at the top anyway, or the number of PSR
or if a change was made and not notified to revenue either.
Which again would show as an outstanding submission, but we would feel that 99% of the time, I suppose they would match, but it's just handy that you can check quickly what revenue do have.
Might that be an instance where an invalid item's gone back on from revenue notifying and so
Yeah.
there might be a mismatch between the revenue statement.
Yeah, that still shows an outstanding in the tab at the top. If an invalid item is detected. So my biggest fear in all of this is where people have system crashes, and it'd be very difficult sometimes for the software to figure out what was actually submitted, when their system hadn't crashed before the crash itself. So that's something I'm working on to make it a little bit more seamless in terms of restoring all that information and making sure all agrees with what was submitted to revenue before.
So again, another payment one, but slightly different. So we currently make the weekly P30 payment amounts for some clients on Ross, rather than having a large amount debited in one go. Can this continue? So yeah, absolutely. Yeah, but again, make sure that the full liability is covered.
They still
because
receive out
unless,
a statement, and they need to make sure that the statement's tied.
and unless they're on the variable direct debit, you won't automatically take the balance. So somebody's just saying, just to check, if a correction is made in the next period, then no penalty will apply. Is this a revenue concession? So I think, Paul, this is referring to where you were saying, but follow the money. So basically, if somebody is underpaid, but you don't pay to them until the next pay period, then there's no correction, because you're actually not paying them until the following pay period. So the submission will include that. However, it's going to be paid over if there's no P30. So again, this is just the statement being issued and, accepted or deemed to be accepted. So our employees are paid for the last week worked, i.e. paid on Thursday for hours worked up to the previous Sunday. Do I need to change anything? So no, that's absolutely fine. Once you send your submission on or before payday, yeah. And just for school situation, can the wages be processed 8 weeks in advance? Absolutely, and the submission sent for those 8 weeks.
Just when they do come back, make sure that they use the latest RPN, pull for the latest RPN when they run the payroll the next time.
Yeah. What is late submissions of weekly? If payroll is weekly, so late submission for any pay frequency is if it's not submitted on or before the day the employees are paid. So what facilities are available for employers with no reliable internet access for Ross?
Okay, well, when you say reliable internet access, first of all, I have to say that the actual communication itself is very minimal.
It doesn't need much.
It's doing like an email. I mean, it's very little in terms of its overhead, so you'd want fairly bad,
not to be able.
internet not to be able. However, we will have the facility for people to actually download the files and upload through Ross itself, so that they can basically put that file onto a memory stick maybe and bring it somewhere else for it to be uploaded. That facility will be there. We hope not many people need to use it.
Yeah. If people are in an area where they genuinely don't have internet, they'll have an exemption from online filing as they currently do anyway.
If they have a current e-filer exemption, there's a system in place to deal for those employers. But yeah, they have to have that e-filer exemption.
I mean, I've done some demos of this software where I've only had my phone to work from. So we're given a hotspot. I've only had 3G, and there's never been an issue with that. So it's not a huge deal that's been transmitted.
Okay, so somebody's just asking, will we be giving instructions on how to use the payroll software in the new tax year? So absolutely, yeah. We do plan on doing training webinars later in the year, just on, I suppose, the changes. So yes.
But hopefully, as you can see from the demo, there's actually very little involved.
Absolutely, yeah.
I mean, it's really business as usual, but there's just a couple of extra bits, and one of those bits obviously makes it a lot easier, particularly the P2C replacement.
Yeah, I think in general we'd all agree that once the system's up and running, it'll make life simpler. It's just about getting used to it.
I suppose the digital service is probably the only thing we have some concerns over, where some people mightn't even know whether they have a digital cert on their machine or not. And,
somebody's just asking, what about people that are paid weekly and monthly? So again, it's just a submission in respect of each payment frequency, but the payment arrangement then will stay the same. How do you do payment for directors?
The same, you're following the money. When you make a payment to the director, you declare it and pay it on that stage. Obviously, the same process, the payroll notification, the ORPN.
So it's just a good few repeat questions there, so I'll just go past those. So just the need for the second employer number apply in the case where you have weekly and monthly. So only if you want to separate it out because you don't want somebody to have access to, for example, a monthly payroll. But if you're happy enough, there's no need for that.
Just amalgamated then into the one payment.
Yeah. New employer, do you retrieve ORPN for a new employee only at the next payroll run?
When you're notifying the
Check
new
for an
employee,
ORPN once they're on the
yeah.
system,
Yeah.
you know.
Yeah.
When you set up a new employee, do you get an ORPN number instantly from them so they can be processed quickly? So again, it's just requesting
Yes.
an ORPN. Yeah.
It is provided the PPS number is there. Yeah.
So we have 2 separate company payrolls, separate login under the one company registration with one Ross digital cert. Will we require, again, that's if they want to keep it separate, they need to apply for a new number.
Yeah.
So this again, I know this is the first of it, but I know there's a good few of these questions. Can you submit more than one list of employees to Ross with a high turnover of staff? So no, you can only submit the list of employees once. And I suppose after that, you need to make sure that you're following the normal process of registering a new employee with a P45 Part 3 or a P46 and uploading a P45 for any leavers.
I suppose that's the thing, just to, I mean, maybe we can cover the list of employees. If you have, say, 2 separate payrolls for the one registered number, you need to make sure you upload those lists at the same time.
Together, yeah. So basically, you'd have to save them to the same location, and when you log into Ross to upload them, select both of them at the same time, and then Revenue will read it then as one file.
Yeah. Yeah. Unfortunately, like again, going back to say the situation where you might have directors being dealt with on a separate payroll, if you upload just the list for just the other staff, it looks like those directors will actually be ceased.
That's it.
Yeah, so, but I mean, obviously, when 2019 comes around, our check ORPN will do a lookup first, it won't find the directors, then it'll do a create new ORPN for those directors, and it'll find, okay, they don't have jobs anywhere else, so it'll give all the credit and cut-offs back to them anyway. So hopefully it won't be too much of an issue.
Okay, so somebody's just asking, for a company with just directors on the payroll, is there any allowance on the processing of returns? In a large amount of cases, the payroll is done yearly when the financial statements are prepared.
Again, technically, it's based on following the money. If a payment is made to the director, the payment should be declared at that point in time.
Okay, is it difficult to upload a digital cert onto a computer that runs the payroll, but the Ross system with digital cert is on another computer?
No, it's not. And we'll give plenty of online help or on-screen help for that sort of scenario. But effectively, it's just copying the digital cert into a location, and then in the software itself, locating that wherever you've copied it to, and putting in the password, and that's it. You shouldn't need to do it again until such time as the cert needs to be renewed.
So somebody, we did say it just briefly there, but somebody is just asking, can the list of employees be linked from Thesaurus? So yeah, under the Ross menu within Thesaurus, we have a function there, facility for the list of employees. And just make sure that you're on the latest version of the software. So if it is telling you about an upgrade, just run that first. Are there any plans to add a reporting function for the annual leave calendar? I'm not really sure what that's.
No, I know the annual leave, Thesaurus Connect handles an awful lot of that. Of course, BrightPay would be a little bit more powerful in terms of its functionality.
So yeah, BrightPay for 2019 will have a new employer calendar where you can see everything on one. It's not there this year, but it'll be there next year.
So I mean, just to say as well, if anybody wants to change to BrightPay, it's a very easy process. It's to transfer the information across.
Somebody's asking, do they need to get new payroll software? Will Thesaurus be upgraded, or will it only be Thesaurus Connect? So I mean, Thesaurus Payroll Manager is still the payroll, and Thesaurus Connect is just an optional add-on.
But it was Thesaurus Payroll that we demonstrated actually working on today. So
somebody's just asking, is the employee list for revenue really relevant for a business with a high turnover of staff?
It is, and that's why we left the retail to the very last tranche to try and make sure that the information that we're going to get in relation to those employees can be as accurate as possible. But we do recognise that there will be a high turnover in the retail sector. That's why we've left them to the last tranche. But we would recommend that do send in your employee list for those employees.
Okay. So it's just a couple of questions, but they're kind of they're separated, but they're the same. On BrightPay Connect, would each employee have their own password to access the employee portal? and for accessing their pay slips. And then should the, I think it was, sorry, same password for everyone and known only to the employer. So no, I mean, the employees should all set their own password. And when they get the link, then they're asked for that. Can directors, sole traders register for my account, as this has been an issue in the past?
Yes.
Yeah, no issues there now. Okay. Somebody looking for Thesaurus on Mac, so we have to be honest and say no, that's not happening. But if you've got, I suppose, a Windows parallel on your Mac, then you can run it, no problem, which we do have for a lot of people here. Sorry, monthly payroll hours received the last working day of the month and paid the following week. What will I need to change to comply with revenue? So again, you don't need to change anything once you're sending the file on or before you actually pay the employees. What will happen if an employee has a large amount of tax due back when they commence a new employment? Will the new employer be obliged to pay this out? So that's no different now, you know, but it would reduce your monthly statement then with revenue.
Yeah.
So will my account online registration now be mandatory for all employees? So yes, I guess if they want to be able to do anything and retrieve information, yeah. So somebody's just asking what will replace the P60. So I know in my account at the end of the year, revenue will issue a payment induction statement, and you have been talking to financial institutions and they know to accept that.
That's it. We're engaging in the process there because there's so many organisations that rely on it. So we're actually engaged with those.
I suppose the good thing about that as well is that includes all the various employments. If there's more than one employment, so at least you don't have to sort of
have five
give in to the bank.
How do we register a new employee and get the current credits for them? So I guess this is asking about the new system. So I mean, once you put them on the payroll, the system, your ORPN check will request
when you request the ORPN.
Provided the allowances aren't with a different employer, they will come back then.
Yes, exactly.
The employee will still need to have registered through my account for that employment though.
No.
Only the first time that they're ever.
Oh, sorry, for their first employment, okay.
Yeah, the obligation still remains with the employer.
Will revenue still be allowing a week 53 tax credit from 2019 onwards?
Yes.
For next year anyway, we don't know about beyond this point. Will we get online support from Thesaurus in December so we can do our pay up to the second week in January? So yeah, I guess same as revenue. If there is not a public holiday, we'll be here with telephone and email support.
Actually, I suppose a question, I'm not sure that we know the answer to this, but when will the systems be able to accept the first payroll submission requests?
I'd have to check that out.
Okay. I know some people want to probably around Christmas time, even though it will be 2019.
Yeah, but if they're closing up for Christmas, they have to send them in advance.
In advance, yeah. I'll check those dates out and see if we have any clarity on it.
Somebody's just saying, what will happen to an employee who is starting to draw down pension but may work for a month or two? Currently, they will be subject to emergency tax up until the date paperwork comes through. Emergency tax will be now much more severe, albeit temporarily.
Well, if they register, if the employee goes into their Revenue My account and registers the two employments, you know, the part-time employment and the pension employment, they can allocate their tax credits and cut off point to
the pension,
you know, whatever way they want it to be. And then obviously once they've done that, when the ORPN request goes in, it'll come back then that's the basis of what the employer, whether it be the pension employer or the part-time employment employer, allocates to the employment for the week or month in question.
Okay. How does the agent know when a new P2C has been issued? New revenue notification message could relate to any client.
Well,
I think it's just me.
Again, it's part of the process of doing the payroll. It's the ORPN replaces the P2C.
Yes, after 1st of January, they can just do it from within the software. They don't need to be waiting on correspondence from revenue, etc. If an employee if an employee, although left an old employer, is still listed on the payroll system because they didn't get a P45, will they still appear in the new system in 2019? So I mean, the import will bring over anybody that's current, i.e. not issued with a P45. So I mean, that won't change. Yeah. Somebody's just asking, what's the difference between a monthly payroll submission and a monthly statement issued by revenue? So I guess the payroll submission is for employees and all their payments and taxes, etc.
It's actually the mini P35.
Yeah, but the statement is just the employer's liability of income tax, USC, PRSI, and LPT.
The replacement for the P30.
So again, somebody's asking, what does revenue require on the list of employees? So again, if you're using payroll software, there should be a file there that's formatted as per your requirements.
It's basically the list of employees is very similar to the P35 without any figures.
That monitor, yeah. Do we need to log into Russ to make the actual payment via the direct debit instruction? So again, if they sign up for the variable direct debit, or well, any direct debit, you will take it automatically anyway, but variable will make sure they're taking what's due. When you make a return and enter start or end date in your software, will that automatically go through to Russ, or does it need to be entered directly on Russ? No. So all starter and leaver information will flow through to Russ automatically on the PSR. Sometimes employers are giving us information late that they paid somebody a net bonus. We then have to gross it up, add it to what we already had on the system, and amend the payroll. Will that option of grossing up be still available in Thesaurus if we amend the period which was already uploaded?
Yes.
But it's going to be late submission.
Well, I suppose effectively it could be. Was it more than a month anyway? Or
well, I suppose it depends on when they're making the payment.
Yeah, as an employer giving us late info that somebody got a net bonus. So I mean, then it wouldn't be report. It would be a correction, but
or an amendment.
Oh, it could be an amendment of the return depending on how late. Yeah. We've done that one. 3. If the payroll is run monthly and the employee cessation date is the middle of the month, how will it be recorded? Because the date of cessation and the date of the last pay date should be the same.
I don't think it needs to be the same.
No.
Yeah, it doesn't need to be the same. So we can handle that. We can handle mid-month leaving dates.
I suppose if we're referring to an employee should get any outstanding money on the day they leave employment, so that's probably.
But again, we'll be able to handle.
Yeah, that. Exactly. Yes, I think they're just asking. Yes, if we can.
I suppose that particular routine will be very much like the mid-month P45 as it is at the moment, except without the P45.
Somebody's saying if they get an update from revenue and they've submitted the figures to revenue, do you amend your payroll and submit it again before making payments to employees?
No, the intention will be that we were not interfering with employees getting paid, so it's on or before. So if they have made a payment, if they haven't made a payment to the employee but they've sent through a payroll submission to us, they can amend that payroll submission and send it through. But if they have made the payment, it needs to send through a subsequent payroll submission.
Somebody's asking how long will you have to wait to find out if a payroll is correct or response from revenue. So it's pretty much instantaneous. Yeah. Somebody wants you to demo how to cease an employee on the payroll software call. So we'll keep that for the next one.
Indeed.
Yeah. Should employees no longer show on the P2C when a P45 has been issued? So yeah, I think that's correct, but we do know that sometimes they remain on it for a little while, but yeah. Why does the revenue manual system not generate a gross to net figure? The revenue will be telling the employer at the end of the month if the figures are wrong. It would be better for everyone to tell them if there is an error before the net wage is paid.
No, the online form that employers will be inputting, it will be based on their own payroll run that they've done, so their own payroll calculations. Revenue won't be doing any calculation or verification of the figures that are being input. So that's why it's really important that employers make sure the accuracy of the information that they're putting online, because there will be no verification from revenue. We will accept whatever figures are put in, and the statement will be based on that submission.
Okay, listen, I think we're probably running a bit late, and I'm conscious that David probably has other places to be, other seminars to
As much as I love
go
being here,
to.
yes.
So,
I will go through the questions, and if there's
Yeah.
any that we kind of haven't already answered, I will get back to people with the answers. Yeah.
okay, so thank you very much for joining us today.
Thank you.
And thank you, Dave, for joining us.
Thanks
as well.
very much indeed.
And Sandra.
Thank you.